Well, I can't remember the time when I've had a new guest on the show that got more positive comment in the comments. I mean, holy mackerel, Larry, you're a star already. Now I know you're not new to this, but Larry Goldberg is back because you asked for him. Hi, Larry.
Hi, Randy. I appreciate that.
So Larry is a venture capitalist. He's owned his own companies, primarily in the tech world, and currently is, I guess, doing a lot. Larry, is the main thing that you do today is to look for VC opportunities, angel opportunities?
Yeah, I do a lot of investment, mainly. I don't have a venture fund. I invest for what amounts to a family office. But I do a lot of advising of young people who are pursuing a venture, whether it's funded or not. And I work with, I would say, several VCs in what they're doing, where I may have an investment. And I'm also very active in a fund that is, as an investor in a fund, but I was also helpful in getting it underway that invests in a lot of the Musk ventures. So I have, some money in Twitter. I have some money in SpaceX and so on.
Okay, all right, very interesting. Well, that's why we have you on today. This is I'm going to admit to my audience that I have no idea whether you're going to like this particular episode. I'm doing it because I'm intrigued to see where we come out on this one. So this is Randy Kirk. If you like having Larry on and you want to have him on again, hit the like button and then hit subscribe and notify, because how are you going to know that Larry's going to be on again if you don't hit the notify button? And then follow Larry on Twitter under just Larry.
Tesla Larry.
Just Larry. That's right. Tesla Larry.
Tesla Larry.
I keep forgetting that. That's right. Okay. So Larry, today we're going to pretend like I am presenting you with an opportunity to invest in this new company called Optimus.com that Elon Musk has just thought of. Well, not just thought of. He's had a few folks working in a little lab someplace, and they've built 5 units. And they've created a video, and we all saw the video here at the earnings report just a few weeks ago. And we've seen the video. You've seen the video. That's where they are. That's the level of intrigue that they can create in terms of what the product can do now and what it might do in the future. And so I'm bringing that to you, and I'm saying, I've got this product. I've got this guy to run the company. We need money, but we need billions, and I'm going to try to convince you that venture company that you're talking about, maybe, or some other venture opportunity, that they're going to really pony up to get a piece of this amazing opportunity. And you're going to walk me through how you think as a venture capitalist and how that might look in terms of this Optimus.com. Does that sound fair?
Yeah, and I'd like to put you in the mind of somebody who is faced with investing in venture funds, and understand that the most important thing to understand about venture funds is that venture investing is an extremely difficult and dangerous occupation. It's not exactly driving a Formula One car, but in financial terms, you could think of it that way. You have to run awfully fast to get to the front of the crowd. If you don't get to the front of the crowd, the money is just down the drain. And the chances of getting to the front of the crowd are slim to none at best. And you have to put yourself out there in very dangerous situations to get to the front. So it's a race. It's a race only for the fit, and you have to think very carefully which races to enter, which car to drive, all those things. So I'll end that, the race suddenly now, and just talk about the business as it is. And
so a couple of numbers that have been thrown around over the years.
Right.
Let's see if these are correct or not. One of them is only about 1 in 10. If you have a really good fund, a very good venture company, group, whatever, maybe 1 in 10 of those will be successful.
Yeah, and I will say that was generally thought of as correct. But the early 20s in this decade, in this last period of time, was so frothy that I imagine it's closer to 1 in 20 or 1 in 25 from those last couple of years, because so many ventures were funded without sufficient forethought. So a lot depends on time and timing. A lot depends. So if you were a venture capitalist in 2000, for example, and funded a lot of .coms, the chances of hitting 1 in 100 were pretty slim.
Right.
If you were a venture capitalist in the 2008, before the 2008 crash, similarly, but after 2009, 2010, things were very good for a while and then became so frothy that it, wasn't that good. So 1 in 10 is over a period of time for somebody who's really good at the job.
And then
there aren't many.
Yeah, and then the other stat was that because of those odds, you're looking for a company that at bare minimum will do a 10x in 2 years?
Oh, yeah. Well, timing is an open book. Some companies you're looking for 3 to 5 years. Some you can go with for 10 years, and some really you hit it at the flex mark. So it varies. If you were an investor in Instagram, within a very short period of time, I forget the number. It may have been months rather than years. Along came, what's today Meta, what was then Facebook, and paid you in the billions, in the multiple billions. I think Instagram was a little bit older than 2 years, but it just gives you a sense of, how much of a lottery ticket it is. And it, there are some guys who keep hitting and do extremely well. Interestingly enough, I read that Elon has done 1 or 2 venture investments and done quite well out of them. He hit, I think, 2 or 3 out of 4, something like that, which was pretty good. But, and there are some companies to whom the cream rises to the top and they get that cream. But for the small investor, it's a rough ride.
All right, well, let's get to the meat then. All right, so you've been presented with this opportunity to buy the first truly humanoid robot company, which is going to be managed by a brain and actual vision. This is my pitch. My pitch is never before have we had the capacity, because there's a confluence taking place, a confluence of technologies that's never existed before 2 years ago, before maybe a year ago, which allows us to use deep language learning, use deep learning in general, use vision, use an existing template that we've seen actually operate in cars in terms of this vision-based automated system. And we're going to put that on a robot that maybe 10 years couldn't have been built the way that it's being built. It's going to be able to balance itself. It's going to be able to do multiple tasks. But there's a lot of robot technology in the world that's brought us to this point. We're standing on the shoulders of giants. And this confluence of those two things at this point in time is allowing for almost a miraculous robot that can be produced in volume, manufactured in volume very quickly. And that the TAM is 9 billion units. And so let's see, there was one more point to this. Oh, yes. And then the president of the CEO of the company will be Elon Musk, who is the greatest entrepreneur in history. Okay, that's what you've got to work with. How would you start the process of thinking about this amazing opportunity?
Yeah, until that last sentence in your presentation, It sounded like the typical pitch. Right now everything's AI driven, and that's one thing about venture investing. It's all about what's the latest and greatest. Right now, AI, anything. So every new product is named .ai, like the .com of the 2000s. And the moment somebody gives me a presentation about a .ai, I ring fence that, my defenses. So let's start by talking about the nuts and bolts of this business of venture capital investing. I'm going to share my screen and take you through a step-by-step approach that I would do in coming to a valuation. And I'm going to come up with a valuation at the end. I've done some numbers. I think by and large, this audience is going to be quite disappointed, because when we do a valuation in venture capital terms, we typically are very conservative.
Yes.
I think what we should do is first determine where we are in this round. This request that's coming in, are we in a seed round? Are we in a first round? Have they raised money before, and therefore we've got some idea what their valuation was and where they are in their business plan? Or have they not got a business plan and they're just starting down the road and just beginning this process? If they were just beginning the process, we'd call them seed or pre-seed, and pre-seed is kind of friends and family.
Okay.
So in a friends and family round, we're kind of, we're tinkering with an idea, we're assembling a team, researching what kind of business would come out of whatever it is we're going to make. And really, we're looking at friends and family helping us, or our own pockets.
Yeah.
To see that, to kind of do that work, that we can go to a venture capitalist and say, yeah, we've got money, we've got something here, we think that we're ready for a seed round. And pre-seed rounds, there have been exceptional cases of pre-seed rounds raising $100 million. And that is for those special cases where people have got such a great name, and that just the idea of them entering into that domain is sufficient to have people say, here's money, do what you like with it, and we'll square up later. Not many of those cases occur. And if you think about the 1 in 1,000 or 1 in 100 we were talking about earlier, this could be 1 in 100,000. But you get from this research stage into this earliest formal stage that we call a seed round. And a seed round means you haven't been funded before, other than this friends and family, but you're a founder and you have the evidence that you're able to execute, either because you've done this before, or because you've so well versed in your field, or you've got such a great idea, or the timing is so good for the market. All the above, you're ready to get your first funding. And typically, when we get those first fundings, the valuations are very generalized. We've got kind of a rote formula, and generally we're going to give you, $500,000. It used to be $250,000, and it became $500,000 during the frothy period of the last 5 years. It's risen up to $3, $4, $5 million for a pre-seed round. But I think we're back to normal now, and I think the pre-seed round is very small. Clearly, your project, Elon's project, is way beyond the seed round.
Right.
And, he's one of those we have a unique circumstance where we've got this incredibly proven person, and we can't really even look at this as being a seed round. But that would be where we would start with a new venture. Who provided the seed money in the case of, this opportunity? Well, clearly, Tesla provided it. Tesla is the sort of in-house founder and provided the money. But if we look at the median money that, and I've talked to this already, how the seed round has risen in value and how it's become really crazy. I mean, there were seed rounds of $100 million and more, and I'll talk to that in a little bit later. So here, crypto AI have been raising those kinds of money. So Yuga Labs, that was security, I believe, raised $450 million in 2022. The Bored Ape craze, Yuga Labs was Bored Ape, I think. And so there were very big checks, crazy checks. But really, we're at this situation where we're at what we call a Series A round. Series A is the first formal funding. We need evaluation. We generally do evaluation. We have a product. Even if it's a minimum viable product, it just does the bare minimum to indicate what the product is, and therefore we can sort of gauge how it fits the market. So product market fit is the most important thing that any company strives to achieve at this stage. We want to see that the product is good and that it fits the market for which it's designed. Or if it doesn't, to find a fit in a market that will consume it.
So Elon famously says it has to be a compelling product at a compelling price, or don't even stay in business if you don't have a compelling product at a compelling price.
That's right. And compelling means the product is great and it has very clear use case, a very clear fit for a particular use. Now, what's interesting about this product is the fit is incredibly broad. And that's a bad thing. Why is it a bad thing? It's a bad thing because you can't market it as an everything thing. It's incredibly difficult to market that way. It's like you scattershot across the way. You have to start somewhere. And what Elon did so brilliantly in Tesla is he started at this, idea of the Roadster. The use case was very simple. It was the high net worth individual who really understood where the opportunity was, what the company was doing, and in a way was investing in buying something that was unique, but which was showing the way to the future. And he wrote out this roadmap that was very clear in terms of product market fit and cars and so on and so forth. In a way, right now, the company Tesla is struggling because it doesn't have like the Next, which is the small car that fits into the lower dollar range. And I think that if it weren't for the pandemic, we would have had it quite a bit earlier. Because I think that was always the plan. But nevertheless, product market fit is what we look for. And I don't want to spend more time on this than I have already, but it is the crucial thing we look for when we invest in a Series A. We look for either the company has a product market fit or it has a very clear path to that fit.
So in other words, once again, what a lot of us on YouTube channels have been doing over the last 3 months with regard to Optimus has been actually filling in that piece. We've been talking about all the use cases for Optimus. So if I was making this presentation to you, what I would want to do is I'd need another video, or I would need an actual Optimus in your office showing it actually doing a useful task, completing it, its capability, are really making it clear that those useful cases are imminent. They're not like maybe 5 years from now like FSD, but rather they are, no, this is an absolute certainty. It might be in a week, it might be in a month, it might be in a year, but as an investor, I can see, no, this is definitely going to happen.
You think about the robotics companies that we've seen to date doing fantastic things with their robots. But, a robot that can perform parkour is amazing. But what the Who's going to buy that thing? Right? And having Optimus and talking about all the things it can do, it's not helpful. Let's focus on, we're going to fill this market first at this price, and it's going to do this job, and it's going to yield that value for that customer or that class of customer.
Yes.
And then when it's doing that and making money, let's look at this class of customer and then look at this class of customer. Because let me tell you, I am a skeptic about, Optimus arriving in the home real soon now. A very big skeptic. Because the degrees of freedom that it's going to need, are so great. And the levels of intuitiveness that you're going to have to endow it with are so high that I think it's, a little ways down the road, much like FSD.
Oh, I couldn't agree more, Larry. I think that the use case in the home or in that kind of environment is probably at least 5 years down the road.
Right.
If I was presenting you right now, I would say, no, the use case for this is in big, everything from very small factories, maybe 10 employees, up to hundreds of thousands of employees doing tasks that a stationary robot fixed case can't do, that needs the flexibility of the humanoid approach.
And there's a price differentiation, because I think I'm of the opinion that the pricing model for Optimus could be a lot more flexible than the pricing model for fixed class robots, whose function is extremely difficult to achieve. And then once you achieve it, to make changes is quite complex.
Right.
But there's a lot to that. And so we got to do the market research, we've got to do the competitive analysis, we've got to develop the use cases. And those are the things we have to do to come up with this first Series A. And we're going to come up with a business model and typically projections. And the source of funds for this are really venture funds and commercial partners. So if there's a big use of batteries or a big use of processors or whatever, silicon, whatever it is, partners may want to provide the funding. And the raise at this level is generally, in the low tens of millions. The average has been about 18 million. It rose somewhat significantly in the last, in the 20 to 22 crazy years. And the valuation is generally 3 to 4 times the financing. So generally you're looking at between 15 and 120 million. There are things.
Yeah. Let me ask you: does it matter at this level what the company themselves have invested? So in this particular case, I'm going to guess that Tesla has invested. I think you could make a pretty good case that they've invested close to $1 billion in Optimus.
I would be very surprised.
Okay, $500 million. I don't, but
yeah,
the number's big.
One of the things that I've studied very closely at Tesla is how incredible Elon is, or that company, actually all of his companies, are in terms of capital efficiency.
Oh, yeah.
And there is nothing like them. There's nothing like them. And so when you say they've invested $1 billion, I can't see $1 billion. When I look at that R&D line item or look at the overhead line item, I can't see $1 billion in it.
I see, yeah.
Because the money that they're spending right now is the lowest, it's best in class. As a motor car company, they are best in class. So where's the money that they're putting into?
Okay, so here's, let me just, because I want to get to a real valuation, and I also want to understand how you think. So in this particular case, we have to imagine that this is a startup, that this has not had the advantage of the chip from full self-driving. It doesn't have the advantage of the dojo, system being built to help it. It doesn't have the advantage of those engineers having all that experience in terms of the deep language and the learning methods, the deep learning methods that are being used on the car. So they would have had, if they were really a startup, they would have had to have done all of that to get to this place.
I will tell you something, Randy. I can't imagine how a startup would have been able to get here.
Yeah, exactly.
So to me, the issue is we are funding a company within the Elon Musk environment, because I can't imagine how a company could have got here, without that. Because when you talk about the silicon, when you talk about the training, when you talk about the software stack that have been developed, which is, I think, the true intellectual property here, as well as the hardware stack, of course. You're talking about an incredible amount of investment. Take it out of the Tesla environment. If you were to put this into any other environment, you would be talking, as you are suggesting, in the $500 million range. I mean, we only have to look at some of the self-driving startups to see it, which at the rate at which they have consumed money. But I am valuing it as is for the given facts on the ground. So either way,
However, Larry, answer the general case.
Yeah.
Does it matter how much the company has invested?
That's a sunk cost, Randy. Mm-hmm. What matters is the valuation at this point.
Forward. Got it.
Yeah.
Okay.
We can't worry about who paid how much in. But that comes to the issue of the amount we're going to be putting in and how much the founder is going to be left with, and that's a sticky issue.
Right.
Because if they put in too much money and they're going to be left with too little, then it's not worth their time.
Right.
And effort. And that's a conversation that happens a little bit later. But right now, we're going to be looking at valuing a Series A round for this venture the Optimus venture as it exists today.
Got it.
And the fact on the ground is this incredible capital efficiency of the company in which it is being developed, and the Elon Musk name on the top of it. So that's something we can't escape, and we'll be thinking about as we move along. So obviously, the average Series A round has been in the 15 to 20 million range. I mean, this slide gives you some idea of the ranges. Back in 2014, the average series was in the Series A was in the 7.7 million. It's crept up to 18.7 now. It's down a little from the peak in 2021, but that's where it is. But there have been massive Series A rounds, and I'm going to talk about some of those later on, because no surprise, this is going to top most of them, in fact, all of them, for the very reasons that we've just discussed. Does it make sense?
Yes.
So just some series rounds, Hulu was 100 million, Transit Security was 543 million. Actually, I have some evidence of a few multi-billion-dollar first rounds, which are very interesting, actually, and I'll talk about them in a minute. So what do we know about Optimus? Because, Elon hasn't come to us with a proposal and he hasn't got a deck, so we have to think about it. So we've had a briefing, we've had a demo, we've had two demos, actually. And the interesting thing is we have two demos a few months apart, which is very valuable. And so they were way beyond the seed round, funded by Tesla. We had this briefing and the demo at Investor Day. We had, the latest demo was as late as, end of last month. We know the size of the battery pack. We know the chipset being used. somebody said it needs only one chip. I'm not sure that's true. I know that the stack today does not run it runs on two chips. That we know from Green the Only. And so I don't think you can get away with a single FSD chip. And I think that's going to need the V4. And by the way, I think that the demands on Optimus, on the chipset in Optimus, are going to be greater than the demands on the car.
Oh, wow. Okay.
Yeah, because there's so many more degrees of freedom.
Yes.
So and the other thing is, he's talked about pricing already, and he says that it's going to be less than a car and it's going to be $20,000. In my mind, I don't think it's going to be $20,000, because as great as Elon's reputation is, and as much as he attracts as he will attract the funding, I think we also know that he's looking into the future. That 20,000 is, in maybe a little bit more time than we're able to actually reach that number in the launch time that we are looking for. So we have to be a little careful. And then I think we're talking about 3 to 5 years. Now, I know everybody else in Tesla land, or Musk land, is thinking 6 months, or this year, whatever this year happens to be. But I think that if we see 3 to 5 years where we are actively selling large quantities of these, I think that'd be very good. That's my view.
So obviously I would have this in my deck if I had more information on that. My best resource, I feel like the best resource on this is Scott Walter.
Yep.
And Scott Walter has said he thinks it's going to, when they're in mass production, which he's not even talking about millions, but hundreds of thousands, it will be around $6,000 each, that he could build this in his garage, the hardware part. That is not that hard. It's just,
the hardware part is not hard. The hardware part is not the hard part.
Sure. It's the software. Absolutely. He says that. Yeah.
Yeah. And,
so anyway, I'm just throwing that in for my audiences. They know that that's how I feel about it. I think I think they'll build 100,000 this year for use in their own factories and and because they need them for the information, the data flow, and they'll be in production of a full-on production in 2024. That's so, but I don't know this, of course. This is speculation, connecting dots. Yeah. This is the best I can do with experts, though. A number of experts agree with me.
I'm prepared to put money down that this year we will not see anything like 100,000. Real money on the table.
I'm sorry. Did I say 100,000? I am so sorry. This year is 1,000. I'm sorry, 1,000. 1,000 this year. Yeah.
I'd probably be prepared to put a little bit of money on the 1,000 as well. I'm not sure they're going to go into large scale production this year. I think we're going to see prototype upon prototype. I think a minimum viable product to reach production, we're looking at next year. That's my guess. Now, they could surprise me and not surprise you and reach something. But we're in June.
Yeah,
we're in June. I go through software release cycles. I've been through software release cycles all my life, and I know what it takes to get working software release. I just don't see us going through enough release cycles to have a functioning robot that we are ready to manufacture in large scale before the end of this year.
No. You and I are on the same page. No, I think production is next year. The 1,000 that they would be building would be basically hand-built in small production lines, only for their internal, when I say internal use, in their own factories and for data accumulation.
I think 100 is as useful as 1,000. Just my view. That's just my view. I think to manage 1,000 robots in a development environment, you need a lot of people.
Mm-hmm.
I don't think that's in the Tesla style. But I could be wrong. You could be right. I'm happy. So now we get to start evaluating this thing, and so we look at the correspondence and the articles on the subject, and I've done that, and I don't see anything on the horizon that competes with Tesla's vision. I just don't see it. I mean, yeah, I see a lot of robots being made, and I see a lot of derogatory remarks on how simplistic their robot is and how terrible their robot is and what bad decisions they're making. I see all the experts, but my word, this combination of battery, efficiency, chip, AI, and manufacturing prowess tells us that Tesla is going to define this market for the general utility and personal support part. And by general utility, I'm including all of industry and so on. And right. Personal support part I see as the future. And, I think they're going to get an unbeatable lead in the marketplace. And so when you get to this level of conviction, you're jonesing to make this investment. This is going to impact your judgment, which means that you have to be very careful. And it's also going to impact the valuation. And there's no doubt we're looking at some, they call about a mega unicorn. I don't know what a I don't know what a unicorn reaches when it gets to that level. They call it gigacorn or whatever. I don't know. So, but evaluating the founder is the single most important factor in determining whether to pursue an investment and an evaluation. And, let's stipulate here amongst friends that we consider Elon Musk a genius and, unmatched. But in the investment community, I believe Elon Musk today is the most investable name in the world.
I think so too.
Other than perhaps Warren Buffett and Charlie Munger, and they're 90 plus years old, which is not old. When you're 77, they look like youngsters to me. But nonetheless, I mean, I've seen the lines of people looking to invest in Twitter and looking to invest in SpaceX. And by the way, just a word of warning, there's a lot of fraud going on in that field, so be very cautious about it. Anyway, and the other thing is that Tesla really, really knows how to produce these things. And, we've heard from the experts in the field about their capabilities. So I think there's going to be a line of people wanting to invest in the Series A round, and they're going to be bidding each other up.
Okay.
And I think that it's going to be as difficult for the investor to prove to Elon that they bring in value with their investment as it is for the investor to formulate a price at which they're prepared to invest. That is acceptable to Elon. Now, I formulated my price, and if the bidding goes above that price, I'd be comfortable not making the investment. But if I get that price, if the bidding goes up to that price, I'm comfortable at that level. But I'm pretty sure that the world is going to outbid me, as you'll see from the price I come up with.
Okay, all right.
So we're going to do this Series A use case analysis. And so one of the problems is this use case is so broad, it's concerning. And one doesn't want the company to go out with a scattershot.
Right.
So we see the idea of a factory go for the market at Tesla internal at the outset, extend to complex production tasks, and then extend to and when you extend to those production tasks and you can prove that, then you have a product market fit, I believe, at this first market that we talked about.
Right.
That's the industrial market. And then moving up the chain, and then ultimately extend to customer support and home and lifestyle tasks. So we think the business model should be robot as a service. And that means that they're never going to sell the robot. They're just going to lease it out. Elon hasn't spoken to that yet.
He hasn't.
But we're making this assumption because it just seems so logical. And so they've done a proof of concept product in less than 2 years, about 16 months, 18 months from the initial announcement. The timeline for each market phase is not yet clear, so we have to make some conservative forecasts. And they've also said price less than 20,000. So we think the introduction price is going to be in the 50,000 range.
Now, normally, if you were actually talking to a VC, the VC would be providing you with these pieces of information. I'm not the VC. I'm sorry.
The company is providing us with this information.
So they would say that if in fact it's going to be 6,000 in production, they would bring that information with support. If they were going to lease it out for 50,000 a year, they would say how they get to that number and why they think they can do that. They would give you a production plan in terms of when they think it'll be ready for mass production, et cetera.
Right. Okay. Right. So we think that the 50,000 represents the notional selling price in the first, once they reach market. That 50,000 would be what we would work from in terms of getting to a lease rate, a service rate.
So to push back on that one a little bit, I've famously been talking about my own company to the point where it's almost become a joke about my water bottles. But I looked 30 years ago, I was looking to buy a piece of equipment that would have been stationary, a stationary automation piece of equipment that was going to cost me $100,000 that they wouldn't even guarantee would work.
Right.
And we think it'll work. We're pretty sure it'll work, but we're not going to guarantee it. And it was $100,000 for that stationary piece of equipment that would only do one job. And it was going to replace 5 employees, 1 shift.
Yeah.
And that's 30 years ago. But you're thinking that this robot would only sell for $50,000 when it has multiple capabilities. It's not stationary.
I want to sell millions of them, Randy, because you bought one of those machines,
right?
And there were at least another 1,000 people who bought one of those machines.
Yeah.
I want to sell not tens of thousands. I want to sell millions of those machines. And, I do also understand that when I put them on the market, there's going to be, the early adopters. They're prepared to pay a higher price. And there's a lot of conversation that goes into it. But we want to get to millions sold. And so we want to drive the price down, not get the maximum for the product. But we want to start at a price that is profitable at the outset because we think we can.
Right.
It's no surprise that many people will start selling software at a loss.
Yeah.
Just to get those volumes up. And, anyway, but I think that 50,000 is probably the price point. I know that the robot, to make it from a physical point of view, if you just look at the atoms in the device, it's very little. It's probably a lot less than a car. Why would I sell it for more than a car? I would sell it more than a car because of the amount of time, effort, and money I'm going to have to put into each individual use case to help get it up and running and all the work around that. And because I want room to go, I want room to grow down. And so, 50,000 gives me a RAS equivalent. And I'll look at that in a minute. 20,000 would be a lot lower and maybe get earlier. I don't think it would get a faster ramp of adoption.
Yeah. Yeah.
So, maybe that's not how Elon's thinking, but that's kind of in the absence of a business plan, I'm doing a business plan. Right. So we don't do a discounted cash flow. We consider many factors when we do valuation. And one of the most important factors we do is what is our exit valuation? And we're not looking at a discount cash flow into the future, that is important because that'll help us determine what the exit valuation is going to be.
Sure.
So we'll get to that, but our thinking all the time is exit valuation. And sometimes we'll go into a round without even doing those numbers because we're pretty certain that there's going to be many up rounds from that point. And let's just see how it goes, because we think it's going to be, such a category buster. So let's do the bear case first. This is going to upset you no end. So the investment is much higher than we think. It's going to take $2 billion. It's going to take 4 to 6 years to hit profitability. We can only lease it at around $1,000 a month because it's very expensive to support and get trained and so on. And there's a relatively limited number of use cases. The TAM is maybe tens of millions of units. And so after at the end of 6 months, we have 1 million units under subscription. We're shipping 500,000 units a year, and it's increasing at about 30% per annum. So our run rate at the end of year 6 is $1 billion a month. It gives us $12 billion annualized. And, at a very hearty valuation of 7 times revenue, that's going to give us 84 billion a year. 84 billion in valuation. Right. At the point of exit. Yes. But to get to the point of exit, it's going to take 3 to 6 years, so an average of 4.5 years, or 4 to 6 years, average of 5 years. So we want a yield of 30% on our money. An exit of 48 billion at that rate means that today's valuation is about $14 billion.
Okay.
And at $14 billion, we're an investor.
Gotcha.
That's the bear case.
Bear case.
But we're a bull. And the bull case for Optimus is investment is minimum, $500,000, because we've got this incredible Tesla environment with all the startups already done. It's only going to take us 3 to 4 years to get profitability. We can lease this thing at $250 a month, and it provides a very wide range of use cases. It's so easy to train. It's easy to implement in the field and support it. The TAM is in billions of units. This thing's going to take off like a rocket. So at the end of 4 years, we're going to have 5 million units under subscription. It's going like gangbusters. We're shipping 4 million units per annum, and it's increasing by 30% each year. So our run rate at the end of 4 years is like 1.25 billion per month, which is $15 billion annualized. At 10 times revenue, because at this rate of growth, at this staggering rate of growth, we're going to get a 10x of our ARR. And that's going to, it's going to value us at about 150 billion. And some of this has to do how quickly the competition can catch up, whether they can build something as good, blah, blah, blah. But we still want our 30% yield per annum, and an exit of 150 billion is going to give us a current day valuation of 51 billion.
Okay.
So in summary, what we've done is we've placed a value of somewhere between 14 billion and 51 billion. And that's about a valuation of $4 to $15 per Tesla share today. So could we find a VC who wanted to make this level of bet, this concentration of bet? Who knows? I don't have that money in my back pocket. Would I join a consortium making this bet? You bet, I would. If we could get a piece of Tesla at a valuation of somewhere between 14 and 51 billion, I think there would be a line of people out of the door who are willing to make that bet. Now, would Tesla sell a piece of it at this valuation? That's the dance. Who knows?
Yeah. So now, Larry, I always use this example. We have Rivian, which I think it was 3 years ago. I'm probably losing count now. Maybe it was only 2 years ago, 2 or 3 years ago. Had no factory, had no product, had drawings, and they were valued on the stock market at $1 billion. Now, this was in a go-go market. So it was kind of like at around the same time that Tesla was valued at 1.2 trillion. So, but it was valued at 100 billion then, that at that moment. And it didn't come down that much initially. It's come down a lot now, but it didn't come down that much initially. So the market, as opposed to a VC, the market, if this was an IPO, might value this same Optimus opportunity at a much higher level.
No, I don't think so.
Oh, okay.
I think that you're looking at a period of time when money was free. Money now costs money, and it costs money at more or less normal rates.
Mm-hmm.
People think it's high, but
no, it's normal.
It's not high.
We're old enough to remember.
Yes, unfortunately, it's true. And so I don't think that there would be a Rivian, that a Rivian today would be able to achieve that kind of, I don't think they would be able to go public. I don't think they'd be able to be funded. So I would be very cautious about using that as a comp. Now, if you want to use a comp, you'd have to look at, something that is something like an AI play, because they're still getting that kind of play today, and they're still getting ridiculous amounts of money at crazy valuations. I think these are crazy valuations. I mean, it's very seldom we've seen, here are some crazy valuations, if you like. SpaceX has raised $8 billion in private equity at very high valuation. But SpaceX is a fantastic business. They've got a proven business model, and now Starlink is a proven business model. But if you look at Terawatt, they make EV charging stations for industrial and commercial users. Their seed round was $100 million, and their Series A was more than $1 billion.
Uh-huh.
So, and that was relatively recent. It wasn't after the real bust, but, around like the round I'm talking about, Series A is kind of unheard of in normal times.
Sure.
And so I think that, even though the numbers are a lot more conservative perhaps than I've been hearing on YouTube channels, and I'll be scoffed at by many of my venture fund brothers and sisters, because they will say, this is crazy. There's no way I would give that that valuation. But I'm a Musk believer. I'm invested in several of his companies, and I'm investing in Twitter, and that's not doing so well right now. But I'm a believer. And by the way, the fact that he was able to raise money at that valuation for Twitter at that time was an indication of how bankable he is.
Right. Yes. Yeah. And Twitter obviously has massive potential, especially with his particular approach and the things that he wants to add to it and broaden it out to do. But I think the Optimus opportunity basically appears to be multiples of the Twitter opportunity. He says it'll be a multiple of the entire rest of Tesla, or at least equal to the rest of Tesla.
And this study here buys that. It's buying the founder's vision. And some people will criticize me. The Tesla Q guys will laugh at me and say, he's a fraud and you're just buying another fraud of his. It's a legitimate, I don't know if it's a legitimate point of view, but it's a point of view.
It's a point of view.
Reasonable people will differ from my findings, and some people find it unreasonable. Some people find it too low. But if we were to have a group of us join together and invest in it, a group of venture VCs join to invest in it within these parameters or better than these parameters, I would participate.
Yeah, I think, Larry, I think the key to what you're saying is you have a set of assumptions here. Your investment concept, your suggestion of what the value would be or what you'd be willing to invest is based on the assumptions, and we don't know. We can't fill in other assumptions other than by speculating. You can speculate on one set of assumptions. I can speculate on another set of assumptions. But if there was hard information and not maybe just the founder's view and the founder's vision, but if the founder came in and could give provable, a proven case or proven evidence of the robot's capabilities in terms of use cases, proven evidence of what people would be willing to pay, proven evidence of the cost, proven throwing in the actual way that he was going to monetize or lease it or sell it.
Right.
What he thought that the overhead would be in terms. I think the big overhead is going to be customer service. I think there's going to be it may not be huge, but it's going to be. Yeah. It's not going to be.
Well, customer service is implicit in the RAS multiple.
Right.
So the RAS multiple, is very well researched or very well experienced, because all software that's sold as a service requires support and service, some more than others. Right. That robot may require a lot more, but some of the genius behind Tesla has been the automation of that process and the reduction of that process. Mm-hmm. So, those of us who drive Teslas know that we very seldom need servicing. Now, when we do need servicing, some of us have had a hard time, although I personally have had a very good time of it, but some of us have had a hard time, which speaks to the problems of that business model. Right.
Yeah, so I would say I'm not unhappy with your result at all, Larry. I think given the assumptions, because again, most of the assumptions that I and others have made it's been the assumptions that would change your model, not the valuation style or method, but rather, if they in fact are going to make a million of them next year and sell a million of them next year and 10 million the next year, that would change your model dramatically.
Mildly. But, you have to remember that there's never been a funding round in the Series A at this level before. No. I mean, even if you look at SpaceX, they've only raised, less than $10 billion.
Yeah.
And, and now you're talking about a huge valuation. Now, how much he'll raise off that valuation, I don't know. It's probably just a very small percentage of the company. If he got that valuation, he probably wouldn't need to raise more than, a couple of $1 billion, which is a very small percentage of the total. And some, is it a private equity investment at that point, or is it a venture investment? These are just labels, but
yeah.
Anyway, that would be how I would value it with with a relatively small amount of information I've got.
Yeah, no, I loved it. I thought it's just everything I was hoping it would be. I hope that you folks out there in the listening audience also found it to be fascinating. Maybe you're thinking you'll do a venture capital offering at some point, or maybe you're on the other side. Maybe you're like Larry. Maybe you're an angel, and it was useful to hear how Larry goes through the process mentally and through the numbers. I certainly found it absolutely fascinating. So if you liked it and you'd like to have Larry back, there's still time to hit the like button and subscribe and notify. And of course, follow Larry on Twitter, follow me everywhere. And, there's always the Patreon opportunity down below if you'd like to take advantage of that for only $5 a month. So Larry, I got to think of another reason to have you back, because this is way too much fun.
It was fun. Thank you, Randy. I appreciate the opportunity.
All right. And to those of you out there, it's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.